Good morning, traders. It's Wednesday, March the 13th. Taking a look at the charts, we've got the SP 500 chart on the top. We've got the VIX on the bottom. And more or less, if we look at the charts here, the SP 500 is creeping up to this resistance level again. We have had a similar price action back in the past where we had a multi-month rally. The market came up, made a top, came back up, made another double top, and then kind of floundered around for a little bit under the moving averages, more or less, and under this resistance area. More or less, the market is feeling and looking like it's trying to do the same thing where it has broken down short term. It's coming back up to resistance. We're into these previous resistance highs, which were very significant sell-off points in the market. This is where we came up, a little bit of a double top, sold off a bit. Now we're coming back up. And more or less, there is a negative bias at this point still in the market. And the VIX is down near these lows. Each time we've seen the VIX down at these lows, we've seen the market put in a top. It was also a significant reversal point for the market over here. And we're going to have some pretty wild price action going forward, I think. The big question is, are we going to roll over and start this ABC correction, this pullback down and see the VIX spike? We posted an article, it was on March, I think, 3rd, talking about we have till March 21st that we should see potentially a big spike in the VIX, and this is what we need is this second leg down that breaks this previous pivot low. When it breaks that low, that is going to trigger a ton of selling in the market and create the VIX to spike up. Now, if we take a look at the rest of the market, taking a look at the other indexes, the Dow forming what looks to be a bear flag. The SP 500 is going to be coming up, testing this recent high as resistance. The Nasdaq is poking to new highs, but that's because we got some large tech companies in there, Apple, Google, Microsoft, all posting some really solid 3-day gains, which is moving the index. But overall, if you look at the other markets, they're all forming bear flags under resistance. The Russell 2000 under resistance and forming a bear flag. Same with the Nikkei. Euro stocks, same type of thing. They look very weak, lots of selling volume. And if we look at the DAX and the VIX, you can see here the DAX gapped higher a couple days ago. Yesterday sold down, bearish formation. And the VIX here continues to depreciate here, moving down, meaning we have less fear in the market now than we did in the past, and we're right up at resistance with bearish formation. So overall, I think the masses, if we do see the selling come off and start to pick up, the masses are going to be scratching their heads all on the wrong side of the trade, which is usually what triggers the sell-off, is when the majority of traders are on the wrong side of the market. So let's take a look at the rest of the markets here real quick. Overall, let's pull up the dollar, U.S. dollar index. If we go back to the dollar, you can take a look here. More or less a little hard to see. It's zoomed out a little bit, but what we're looking at is we had a big pop here in the dollar. I think there was a lot of people moving their money around pre-Brexit move here, and then it looks like today we got a big gap down post-Brexit, more or less the big move up based on news anticipation, and then we got the big sell-off on the results. I think those two negate each other, but overall, if you look at the price action, we are still channeling up with the dollar. Markets are still heading higher, or the dollar still within its range, its channel here. It did get up into resistance, which would have acted as extra selling pressure, but more or less it's hit that level, it's sold back down, and I expect us to find some support over the next session or two, and we do expect the dollar to move up to the 99-100 area, which is somewhere up in this range. And I think if we do get this support here in the dollar, that is going to send more or less the precious metals and miners sharply lower, and the big move in miners really has been simply the big drop in the dollar. And today we're going to see precious metals moving higher with that sharp drop in the dollar. So let's take a quick look at the gold chart. Gold up 0.75% this morning. It's having a nice, let me get rid of this VIX here. It is having a nice pop today. You look at the price action. We talked about this about a week and change ago. We talked about right down in here that we could see the dollar or gold pop up to the $3 or potentially go up to this 310 mark as the kind of oversold reaction. This is normal price action in the market. I know a lot of people are getting extremely bullish and antsy on the market, but this is a normal move. You have a sell-off. big wave of selling, and then you have to have some type of reaction high. The markets just usually don't just sell off. They need to. Um, you got to have the down, you got to have an up. They always wiggle their way down or wiggle their way up. If we look at the overall price action of gold, you can see we've had a series of bull flags, for bullish formations in the past, and now we had this blow off top on this day here. We talked about the market being more or less the top. We were looking for 1 or 2 more days higher for it to reverse, and we ended up getting that drop, and now we're forming a bear flag, and we're starting to move lower in our opinion. We are right up at resistance, right up to the upper end of our range here for the or for gold, around this 310 mark. This is more or less what we're anticipating. We should start to see price reverse. Everyone today, I think, is going to be feeling the exact same as they did over here when I did an interview with Howie Street and talked about everyone was extremely bullish. You say one negative tone on gold and you get beaten up online, and that's the same type of thing I think we're going to see here today. Is everyone is getting bullish, everyone's piling in, the sentiment is super bullish, and usually that's a sign that we're going to see the market roll over. Could take another day or two. Maybe we're going to see it reverse by the end of the day. Who knows? But overall, you can see we've gone from bull flags to a breakdown to a bear flag. We're at resistance. Everyone is bullish. We are in position for a continued move to the downside. Obviously, we're under pressure a little bit with this bounce. It would have been nice to see this really collapse and go into a waterfall sell-off, which is what we're more or less anticipating. But this is the other reaction that could have happened, and it is happening. The market always has a way of trying to create maximum pain before a move happens, and we're just going to let the market do its thing. Looking over at, let's pull up natural gas real quick. Natural gas continuing to hold its ground, more or less. We're looking for a final move down into this support zone, this 270 area, for potentially another trade. You can see price here has dropped. It's forming a little bear flag. If we get the second half of that drop, that'll give us that 270 downside potential support zone from this previous little base. We played this trade. We got long down here at the 255. We got out over here for a nice 30% gain on our UGAZ trade. Potentially we can re-enter if we get down to this 270 area, and we do anticipate a potentially 315 pop in natural gas, which would give us another one of these really nice gains in UGAZ if we get the type of setup and the type of pattern that we're looking for going forward. Looking at crude oil's got some power today. It's muscling itself up. We have seen it hit this level several times in the past. Each time big sellers have stepped in and driven price back down. More or less, you look at the pattern, it is forming what looks to be a type of basing formation, cup and handle, inverse head and shoulders, however you want to call it. Everyone sees things a little differently, but it is testing this level. We'll see if it can close with some strength. Overall, if it can close and hold its ground above here, then we are going to be seeing it most likely run up to the 61.90 area or $62 per barrel. That'll be the next upside target going forward. But again, I think there could be a lot of play here that if the dollar reverses today, tomorrow, or the next day, we could see crude oil fizzle up, back out, and come back down to the lower end of this range once again. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.